Also, the SEC is going to be a very week-long activities here in Lagos, and that starts today. Of course, the CMC meeting will be tomorrow. That's the key meeting for this. And, of course, the discussion there will also focus on the 10-year Nigeria Capital Market Masterplan that's been in the work for a number of years. Then that was inherited by the Munir Gwazo's administration, and rolling it forward, what the future of the market will be. We have a few discussions around this. Let's bring in Eronmosele Aziba, who is live here in the studios from Afrinvest Securities, to talk to us this morning. It's good to have you.
Thank you,
Hope you had a nice weekend.
Yes.
Did your football team lose any match?
No, we actually won. Arsenal.
Oh, really?
Yeah, we did.
But some folks seemed a little bit unhappy that the margin wasn't as wide as it ought to be. I didn't watch.
No, but in the end, the 3 points is the most important thing, so that's what they got, and we're happy.
You're happy?
Yeah.
At the end of this conversation, I'm going to throw you at our sports team. Cecilia and the rest of them, then you guys can go argue with that over there in the newsroom. But for that, I want to talk about money and investment market. That's my business here.
Yes,
except when I'm upset with the transfer fees. That you pay us
it's the reality of
£500,000 for a single individual in just a week.
Yeah, I mean, it's the reality now. There's a lot of money going into football. Maybe we should discuss that on the show sometime.
Yeah, but that's going to be old age football, not the young ones. It's too late to roll back the clock. So I've got to leave that. I couldn't make that money next time around. Maybe. I don't know. But I love this job. But let's look at the capital market and where we are. The CMC meeting.
Yes.
Most times we talk about the MPC meeting of the central bank. This looks like the flip side of it, for bringing everybody together: the securities exchanges, those who are involved in market activities, whether broker, dealer, and Afrinvest will be there. Of course, we expect your CEO to also be in attendance. What do you think is key for the market at this point in time?
Well, I mean, looking at the mid-quarterly. And looking at the recent developments that we've seen in the market, especially in the second quarter, it's quite imperative that they have this meeting to discuss activities that have taken place in the market, the massive improvements that we've seen, and how it can be sustained going forward, better ways to improve professionalism in the market, financial literacy, as well as customer protection. And we believe this would be key items that would be discussed at the meeting.
What are the key issues for you along this line? The roadmap is okay, but if you look at the SEC under Munir Gwazo over the last, I think it was getting to about 3 years now, about 2 years since he got into office. It's just less than 3 years. What do you think this roadmap that has been pushed ahead, do you think has achieved something, or is a roadmap that you think is on course, or should it be tinkered with?
Well, we know the greater part of the last 2 years have been very challenging for the capital markets as a whole, with the exodus of foreign players from the markets, and greatly affected activities in the market. But we've seen a lot of improvement recently. So if you look at some of the objectives of the 10-year roadmap, introduction of innovative products within the market, we've seen launch of and release of some new products. For instance, the savings bond, which was targeted at retail investors. And this is also tied to the fact that there's one of the major objectives is also to strengthen retail investors' participation in the market, especially domestic investors. And this has been largely successful. We've seen some new products come into the market. Also in terms of improving customer protection, as well as financial literacy. There have been workshops that have been organized to sort of improve individuals' knowledge about the products that they're launching, how they can key into these various opportunities. We know there have been a lot of other investment
alternative investments
that have come up, like the MMM and all, in which we saw a lot of individuals lose a lot of their funds. So one of the major reasons why we saw a lot of people go there was because it was majorly targeted at the retail end of the market. So we had a lot of people going in there. So in the market, which is regulated by the SEC, we've tried to see how they can key into this retail space raise secure investment opportunities.
It's amazing
for
how
investors.
folks like MMA make so much money that the formal market wasn't able to make.
Well, I mean, one of the things that possibly attracted people to it was the fact that ease of entry was relatively easy. Exits was more or less the same thing, and it was quite easy to understand. So that's one of the things that we've been trying to talk about with financial literacy, letting people have more knowledge about what's actually there for them to take advantage of, as opposed to going into alternative investments, which could be detrimental to
this time 10 years ago. There was a big party going on Custom Street, on Broad Street. Everybody were happy. This time 10 years ago, because the market was at one of its highest peak in about 50 years. We've come a long way, 10 years since the market broke down in the first quarter, finally in the first quarter of 2008, to be precise. So, in terms of the retail investors, it looks like the issue of confidence is still out there. They're still tiptoeing, trying to dip one finger at a time into the market and see whether it's cold or it's really hot, boiling hot. They're looking at the market and they seem not to be so keen to embrace the market the way it was, even with this rally at the secondary window.
Well, you know, there's still that lingering fear from activities that took place in 2008, 2009, like you mentioned, where the market was bloated and crashed. We had a lot of investors lose a lot of their funds in the market. But over the years, we've seen general operations in the market improve. Corporate governance has been strengthened. There's increased transparency. There's also been the adoption of technological innovations to sort of improve efficiency within the market. So there's one of the major challenges has been trying to change investors' perception about the market. And I think the onus still remains on all the market players to sort of advise their investors and educate them, their clients, and educate them on opportunities that are in the market and why the time is right for them to come back to the market.
Whose key responsibility is it?
Well, like I said, I think it cuts across the operators, market operators, us, the regulators, basically people in the financial services industry to sort of boost the knowledge that investors have.
The banking sector will be key here, because when we look at the market meltdown 10 years ago, the bank seems to be the arrowhead of that. They boosted the market 2004 and 5 with the bank sector consolidation, and then we had a boom 2009, 5 banks, and the next year another 5 banks or so were taken to the cleaners. Since then, do you think the market and the banking sector, based on your reports from Afrinvest almost on a yearly basis, give us a picture that, look, we can depend on these same guys moving forward?
Yes, I mean, it's safe to say that Nigerian banks now are a lot stronger than they used to be. Despite the challenges that we faced in the economy, the banks have remained resilient. I mean, especially for the tier 1 banks, even with the threat of devaluation of domestic currency, when we sort of carried out our stress test on the banks, a large number of them were still remained within their capital adequacy regulatory limits, which is also testament to the improvements that we've seen in that space. So yes, the banks are a lot stronger now. There's that confidence level can actually improve.
A couple of folks believe that we haven't served out punishment, perhaps to a number of folks who were involved, who brought the market down some years ago.
Well, I mean, I think for some of the market operators who might have been involved in nefarious activities, I think the SEC must have implemented some sort of plenary actions on them for some of the activities that they carried out. And as a result of that, we've seen total number of market players actually reduce, because now you have minimum capital requirements to ensure that you can stay in the market and cover investments, and also, yes, there have been improvements with regulatory, and that has been positive for the market.
You think some of the things that the SEC has been doing in the last 2 years also point in that direction? There's a need that you folks should also have the required number of sponsored individuals, whether they're compliance officers that will have to interface with the SEC.
Yes, I mean, we have to make sure that operations within this market operators are in line with international best practices to avoid similar situations to what we had in the past. So yes, with the inclusion of compliance officers who are there to ensure that activities are carried out to best, highest possible standard.
Well, some folks, some of our viewers are getting a little bit worried that there are a number of securities market laws, regulations and guidelines still pending before the National Assembly, and they haven't yet been fixed.
Well, I believe one of the major ones now is with regards to the demutualization of the market. Yes, the process is still ongoing, and it's a trend that we've seen across even pairs. So, for instance, in Kenya, we've seen demutualization of their stock exchange. Same thing in South Africa. We know the positives that will come with the demutualization. It would increase transparency within the NSE, given that they have to be in line with requirements for companies listed on the exchange, expose them to more capital funding, which is also a positive, and then other investors can also key into this. So we believe this is one major bill that still remains within the National Assembly that could potentially be cleared soon.
You think if we have demutualization, some folks will believe, yes, this is it. Okay, this is now blue ocean. This will bring more best practices, global best practices to the Nigerian Stock Exchange. For example, the London Stock Exchange will say we are buying XYZ of shareholdings in the NSE.
Well, I mean, it's
open heaven. It's open sky.
It's definitely going to be a positive for the market, so we can only wait and see what actually happens.
And finally, what are your thoughts, about 2 minutes, about this raft of rights issues that are coming to existing shareholders? One or two of them are open already. Is this an indication to retail investors locally? Folks who bring in 10,000, 20,000, 100,000 to invest in the market, Naira, I mean, in Naira terms, I need to qualify that, not in dollars, that yes, there's a confidence here, because when companies raise money, to decide to raise money, whether to build new facilities or refurbish or strengthen cash flow, what does it really mean for local investors? So that folks won't come tomorrow and say, the foreign guys have taken us out of the market once again.
Well, I mean, we know what the rights issue is when existing shareholders have the rights to increase their holdings in a particular stock, usually at a discount to the current trading market price. Because of the challenges that we've had in the past 2 years, we've seen the impact on some of these companies, especially the consumer goods companies. We have two, Guinness and Unilever, who are implementing rights issues at the moment. With the renewed optimism that we've seen in the market, we believe now is the time for them to come out to actually raise capital if need be, and this has been a major factor that has driven the spate of rights issues that we've seen from the companies, and we believe a lot of investors have been taking advantage of this.
The key question, I said, 15 seconds. Is this an indicator to local retail investors that they should watch the market?
Yes, I mean, of course it is. I mean, with the companies that are raising capital, they're obviously going to expand operations, which will be positive for their books.
Because this are their companies anyway. Exactly. They're already existing shareholders. They're just asking for more money. So read the books and decide to take whatever decision you're going to take. Thank you very much.
Thank you,
bright and early. Thanks for starting the week with us. Eronmosele Aziba, one of the research team analysts at Afrinvest, securities registered and licensed operator in the market by the